So thank you everyone for joining us tonight. My name is Ferraro. I am the president of Mortgage Markets QSO. We are the first mortgage partner of your credit union, Pioneer Valley. And tonight we're going to talk about a very interesting and exciting topic that I know you're all on pins and needles to talk about. One of the most exciting things you can talk about in your life, and that is buying your first home. It's going to be very interactive tonight, and there's a lot of information to digest, and I'll kind of give you the scope of how we'll do this. Before we do that, I just want to introduce who's presenting and the faces of everyone here. So Tony, can everyone see my screen?
No, I see you.
You can't? Okay, hold on. How about now?
There it is.
There we go.
Yes.
There we go. Thank you. Hold on. It's never perfect.
Nothing is.
So it makes
Hold
it
on.
interesting.
How about now? Can you see that?
Yes.
Oh,
Yes.
Yes.
Thank you. Okay. So here's who we have here tonight. Tony Sanchez. Thanks for joining us. Tony is the vice president of lending from your credit union, Pioneer Valley. And Liliana is Tony's loan mortgage originator who can't be here tonight. Tony, we really appreciate the opportunity to present to your membership, and we're looking forward to giving them as much information as possible.
Excellent. Thank you. And thank you everyone for joining tonight.
Cindy Berger. Hi.
Hello.
Cindy Berger is the mortgage loan originator for Mortgage Markets QSO, and she'll be giving you some key information tonight as well. We have Len Foy. Len is the exclusive partner and closing attorney for Pioneer Valley. Len, we appreciate you joining us tonight. Where are you from and where are you based out of?
Our office is in Nashua, New Hampshire, which might seem daunting to some people, but we really do have a regional presence. We do real estate transactions in each of the New England states. We maximize the convenience of our customers, clients, and colleagues. So we always bring the mountain to you and never force you to travel to the mountain. And I'm licensed to practice in every New England state with the exception of Rhode Island, but in Rhode Island, I'm authorized to issue title insurance. So we're very active in that state as well.
Great.
And I would not have missed this for the world. Thank you very much for including me.
Thanks for being here, Len. It's our pleasure and we appreciate it. Patrick, how you doing? Patrick's mortgage loan originator for Mortgage Markets QSO. He exclusively works with Tony and the team at the Pioneer Valley Credit Union working on first mortgages. And I know, Patrick, you have a lot of information to share tonight. So thanks for
yeah.
Arlene, the realtor Castellano. A lot of you may know her from the area. She's a very well-established realtor in the Springfield, Mass area and surrounding towns. And she is going to be the realtor extraordinaire to talk about this environment, right, Arlene, out there today with the inventory in trying to find a house in a very difficult time. And I know you're going to talk about that more a little later on. So
Yes.
thanks for joining us. We appreciate it. And we look forward
Thanks
to
for having me.
Yeah, we really do. So, all right, so let's get started. We want to talk about exploring your mortgage options. Cindy's going to kick things off. We ask everyone, if you have a question, put it in the chat area. We will answer it as we go, or we might wait till the end. Again, we want to make this very interactive, and we want to make sure that we answer all of your questions and leave no stone unturned. This is about you understanding how you buy your first home. And again, we are all here because we know there's a lot of questions that revolve around that. And Cindy, this is your expertise, right? You talk to a lot of people every day who want to buy their first home. And I think one of the things we talk about all the time is people who call you, they need to understand what kind of options they have, right? So why don't you kick things off with that?
Yeah, absolutely. Well, I just want to say welcome everybody, and thank you for taking the time to participate in the first time homebuyer seminar sponsored by your credit union. I know it's a nice day out. Everyone has obligations. So we're just excited that you're here wanting to learn more from the experts of what we can bring to the table for you. My name is Cindy Berger. I'm a loan originator for Mortgage Markets QSO. I've been in the credit union space for over 20 years, specializing in mortgages for the last 10. So I really enjoy what I do. I love working with my first time home buyers and working with you. So
Great.
understanding your options. So funny story, when I bought my first home many, many years ago, I had no idea what I was doing. I didn't know that there were different types of mortgages out there. I just wanted to buy a house like you guys, right? So being educated on your options gives you confidence in the process. So I know that you all are going to be much better at this than I was. So my job basically as a mortgage loan originator is to help you choose the right mortgage product for your situation, to help guide you throughout the process. You know, let's face it, buying a mortgage is a big deal. It's the biggest purchase of your life. And it all starts with what you guys are doing here, getting the education, making that first phone call to find out what you would qualify for. Are you ready? Is the credit there? Is the job history there? We're here to help you throughout the whole process. So one of the most common types of mortgages that are out there is the conventional loan. It's a very popular mortgage in the process, in the environment that we're in right now. It allows you, minimum down payments of 3% or 5%. If you put less money down, you are going to be required to purchase what we call mortgage insurance. It's just extra protection for the lender, but it's a great way to get into a first home. Slide. So there are several different types of mortgages out there. Another type of mortgage would be the adjustable rate mortgage. Basically, with your adjustable rate mortgage, the advantages are you can get in at a lower interest rate up front, right, for so many years, and then the rates can change, but it allows you to maybe purchase a little bit more upfront, knowing that your situation might change down the road. You might get a raise in a few years or something like that. So it's a great product as well to get into a first-time home.
Tony, what are your thoughts on ARMs in this environment? I'm curious because we've been getting a lot of calls from people, first-time home buyers specifically, right? There's a lot of news out there going around saying, hey, you should get an ARM right now because you can get in a fixed low rate for 7 years, and it could be a point, 2 points lower than a conventional rate, and then possibly refinance in 7 to 10 years. I don't know if you're getting a lot of those inquiries, and what's your thoughts on that?
We are, Mike, and that's exactly it. The members have to understand that the points are a lot less than a regular conventional loan at this point in time. So a 5-6 ARM or even a 7-6 ARM could give them the benefit of a lower rate for the next 5 or 7 years. And then, yeah, you're right. They could go ahead and refinance, but we don't know if we're going to be in that house for the next 5 or even 7 years.
Yeah.
So they might be selling and moving on to a bigger home. They might start with a starter home and then move up. Some of them go into a condo and then get into a single family later on. An adjustable rate mortgage right now is perfect product for the member versus a conventional rate that's got probably a 5.25% rate versus a 3% rate.
I'll be honest, everyone, and I'd be curious, Arlene, on what you're seeing too out there. I couldn't agree more, Tony. If I was buying a home in this environment with rates rising, right, in the 5s, 6, why wouldn't I look at an adjustable ARM where I can get a fixed rate, maybe in the 3s, and save a ton of money for a period of time? And then, Tony, as you said, it's your starter home. You might move up to a bigger home. You might be in a condo. You might go to something else. And then you can refinance it at that time and get it. I think this is something everyone on the call should take a look at. I know we've been getting a lot of interest in it. Arlene, are you seeing people when shopping for homes, do they talk about ARMs or not really? No,
not really at all.
Okay.
It's I work with a lot of first-time home buyers, so obviously FHA, and then the conventional 3-5% down. I don't know if maybe the quality of buyers I have that don't allow this to happen, or that the lenders aren't offering it as a solution. So this is, I know of it, obviously I'm in the business, but it's not something I've been seeing at all.
If anyone wants more information on the ARM product, you want to connect with Tony or my team at the end of this, we're going to give you our information. It's something you definitely want to explore. But that's a good point, Arlene. Thanks. So Arlene made a great distinction. FHA, very, very popular product, right, Cindy? You get a lot of calls on FHA. Talk a little bit about that and why that is beneficial for a first-time home buyer.
FHA is a great product, first-time home buyer. Basically, it's a government loan that will help you get into your first home. They only require a very small minimum 3.5% down payment. I know a lot of people, first homes, are also looking for multifamily homes. FHA will allow you to use that rental income to help you qualify for a little bit more. So it's a great way to get into a home. They're a little bit more forgiving when it comes to, you know, if you have a few credit blips, maybe your credit isn't perfect, or your debt versus your income is a little bit on the higher side. They're definitely a little bit more forgiving with that. So it's a great product for, especially for our first-time home buyers.
Anything else you want to go over in that? I mean, Tony, I know you have some members that live in Connecticut and they could possibly qualify, right, for CHFA. That's a good alternative. We get some interest in that, right, Cindy? Because the consumer or the member wouldn't necessarily have to put all money down and they could finance a portion of their down payment. Is that-
Yeah, it's a Connecticut-based loan. So if you have members that are living in Connecticut, they might easily qualify for the CHFA loan. They offer the down payment assistance program. So basically they set up a small loan for the down payment in like piggyback with your mortgage. So you have, you know, 2 payments each month, but it definitely is a great loan if you're a Connecticut resident.
It's an excellent product for Connecticut. And yeah, you got the VA and the USDA. The VA, you know, if you're a veteran, it's 100% financing. And then USDA looking in rural towns such as Palmer or Southwick in our area, Hampden County, that's USDA is 100% financing. That's another great product to get into.
That's what I bought my house, USDA in Palmer.
Yeah, nice.
Oh, you did? Really?
Yeah.
Okay. I think the spirit that I take from this, everyone, is when you're a first-time home buyer, there's options, right? Whether it's conventional, whether it's an ARM, so you want a shorter, you know, payment for a short term, FHA, VA, CHFA, we're here to help you, try to put you in the right product for you. A lot of different things. I think a lot of people, Tony, think it's a box for a mortgage, right? You have to put 20% down and that's it. It's just not the case. There's so many different options in today's world.
That is correct.
All right. Well, Cindy, thank you very much. I appreciate that. Patrick Scheel, how you doing?
How you doing?
How does somebody qualify for a mortgage in this world? You get calls all the time, right? I mean,
Oh yeah.
What the heck do I do to qualify for this thing? And you're the extra awesome guy on this stuff. Talk a little bit.
Yeah, I mean, let's just jump into it. So obviously credit is the biggest factor. The sooner that you could kind of, and I suggest kind of starting this on your own as well, pulling your credit, making sure all the information on there is accurate, seeing if there's any collection accounts, any delinquencies, because it is going to determine your interest rate, how much you pay for PMI, or if you even qualify. And this just kind of gives you a breakdown of the different ranges, the different tiers of credit. Anything 740 or higher is considered top tier as far as mortgages go, but we could go as low as 580 on an FHA loan. So you do have options depending on exactly where you land.
Okay.
I have a question for you.
Yeah.
Sure.
Go ahead.
And I get this all the time and I know the answer, but I want you to say out there. So I have a lot of buyers that will ask me when they're shopping for a loan about their credit being pulled and how that impacts their credit. That first time they get pulled and if they go somewhere else, how does that affect them?
Yeah, and that's why I suggest pulling your own credit. So when you pull your own credit, it doesn't necessarily affect your score, and you could just make sure all the information is accurate. But when shopping for a mortgage, you do have a 2-week window where any inquiry done is considered one pull. So certainly if you're shopping around, you want to use that 2 weeks to have different lenders pull your credit so it's not constantly affecting your score.
I believe it goes, and Tony, tell me if I'm wrong, I think it's 2 points or 1 point that it affects your credit when an inquiry is pulled. Is
Correct. 1 to 2 points, yeah, depending
1 to 2
on where you are on that credit score scale.
And so Patrick makes a good point, Arlene. People shop for a mortgage. They might be too afraid to get a ton of pulls in that time. But if you do it within that 2-week period, you're only affecting your score 1.
Like Patrick said, you have the right to shop. So
Right.
Exactly. They
And
kind of
also,
expect
too-
you to.
Good question, though.
yeah.
Go ahead,
Yeah, and
Cindy.
our credit pull is also good for 120 days while you're shopping for that mortgage. So
Correct.
it's good for a while.
Talk, Patrick, a little bit more about PMI. We get a lot of confusion. How does that work? I mean, people call all the time and they don't understand it, right? Or they have questions on it, first-time home buyers. Talk a little bit about that to the audience and how that works.
Sure. So anytime you put down less than 20%, you do have PMI on the loan. Part of it depends on the program you go with. If you go with FHA, they do charge an upfront mortgage insurance premium of 1.75%. Plus they charge a monthly mortgage insurance payment that's on the loan for the life of the loan. So in the long run, it does end up being a little bit costlier. But as far as conventional goes, part of it depends on your credit score, how much you put down, type of property, things of that nature. And with conventional, typically it falls off once you reach 22% equity in the property.
So 22%. Okay.
Yeah.
Okay.
There's a question in the chat.
Okay. Here's the question. I'll get there. Ashley is asking, do we need a certificate to qualify? If so, do we get a certificate from the seminar? Tony, we don't need a certificate, right, to
That
qualify?
is correct. We don't need a certificate.
Yeah, so what we'll do, Ashley, is we'll reach out to you and set up a consultation with Tony and his team or my team
Yes.
over, all the options for you, and then answer any questions you may have. I'm good? Okay. Okay. Continue, Mr. Patrick.
Yeah. So along with credit, these are the different things that we look at. So obviously your credit history, your income, your expenses, and then how much you have saved up to put into the transaction.
People call a lot of times and they say, oh, I didn't pay some medical bills, or, oh, I was late on my car payment. Am I going to qualify? It's your whole credit history, right? As a whole, per se. Can you talk a little bit about that, Patrick, that it's not just some dings maybe on your credit, that you're looking at the whole kind of history? Is that fair?
So yes and no. So certain
Yep.
things affect your credit and kind of stay with you longer. So one of the things that affects your credit is how close your balances are to the limits. So that's the easiest fix. If you are able to pay down those balances, that's the quickest way to kind of have your score rebounds.
Okay.
But those delinquencies kill you. They stay with you for quite a long time. So, and again, that's why I suggest kind of pulling your credit early on. As soon as you know, okay, I'm going to start looking for a house and maybe it's a year down the road, pull your credit and just make sure all the information is accurate, that there's no late payments, no delinquencies or collection accounts, just to make sure that you're in the best position possible to purchase a home.
And Tony, does your team educate your members if they pull their credit and want to talk through that to understand that?
Yes, we'll definitely do that. We suggest everyone look at annualcreditreport.com. You're
Yeah.
allowed to get your credit report for free. And then if you pre-qualify with us, we'll get you the credit score, so you don't even have to pay for them. But you can go to Experian.com and get your credit score that way. We try to stay away from Credit Karma because they don't use the same FICO scoring as
Right.
we use in the industry. So you really want to get something directly from Experian or your annualcreditreport.com and then get the credit score directly from us.
Good point.
Yeah, I think that's one of the toughest conversations I have. Because, Credit Karma is very popular. A lot of people do use it. And when they pull their score, the scores that I get generally are very different from the scores
They are,
I
yeah.
get from Credit Karma.
Yeah, so we use FICO, and I mean, there's like a FACO with them, but they have their own scoring module. It's just something
Right.
that which is not used in our industry. That's all. But it is a good way to start because they do have a wealth of information on the website. Don't get me wrong. But as far as an accurate credit score, you're definitely going to want to get it directly from the 3 credit bureaus, or like I said, a pre-qualification with us.
Yeah.
Tony, those are the feel-good scores, I call them.
Yeah, there you go. Feel good. I like that. I like that.
Debt to income, another popular question, right, Patrick? I know you talked a little bit about this, but go into a little more detail on that.
Yeah, exactly. So this is basically how we decide how much purchasing power you have. So we look at all your monthly obligations, anything that shows up on credit. We don't take into account utility bills and car insurance, things of that nature, but typically anything that shows up on your credit, minimum payments on credit cards. And then we take your gross monthly income.
Sorry, keep going.
We take your gross monthly income. And with the debts, we also include the housing expense. So principal, interest, taxes, insurance, PMI, all of that to come up with this ratio. And again, part of it depends on what program we're putting you in. Conventional typically is anywhere from 45% of your gross monthly income up to 50%, depending on your credit. FHA, I've gone as high as 57% on the debt to income ratio.
So Tony Sanchez, I get calls all the time. Michael, I've paid all my bills my whole life. I pay every month. I don't have a ding on my credit. I never missed a payment. My debt to income it's 80%, but I pay everybody. Why does that not qualify me for a mortgage? I can't.
It's a great question. I mean, it's the program guidelines, so we have to stay at the 45% per the federal government. The CFPB has those rules for us with the ability to repay. So we're capped at the 45%, and in some programs we can go to 50%. And as Patrick alluded, even FHA can go as high as 55%. But again, everything is capped because of the ability to repay.
Let me ask one more question because we got this too, right? I pay all my bills and I'm married. I don't want to put my spouse on the loan, but there's other income coming in, right? From seeing that I've paid all my bills. To your point, again, it's very regulated, right? You have
Correct.
to be in that box, the 45 to 50%, even though you may know other income is coming in and you see it, it has to be within that box.
Right, because if it's not on the application, you can't use it. Correct.
Got it. Okay, good. I know we get those questions all the time, Patrick, so we want to make sure people understand that. And again, when we talk to you and have a consultation, we can go through that. But just to understand, it has to be within a box. It's very regulated on debt to income, even though it might be other circumstances. We have to do, as Tony says, right within the government guide.
Well, that's the thing is that we all want to, we work with everybody, right? I mean, some members may qualify for a $300,000 home, but they see the monthly payment and they want their Xbox, they want their Netflix. They don't want to give that stuff up either. So the whole point of the pre-qualification, it's, yes, we're going to say, hey, this is how much you can afford, but you as the member, it's your paycheck, it's your pocket. You're going to have to say, yeah, I really want to go that, or I don't,
Right.
So there's that end of it as well,
I love it. And this is a perfect segue, right? So Michael Ferraro, I'm a first-time home buyer. I talked to Tony. I'm getting excited. I go with Arlene, the realtor, go out, find my home. You know what Arlene's going to say to me, everyone? Did you get pre-qualified? And so I say, oh, I got to talk to Patrick real quick. Patrick, talk a little bit about how you pre-qualify someone for their mortgage and how in depth you go on that.
Yeah, so these are some of the documentation that we would need to kind of start that process. So normally it's just you reach out to me, we set up a consultation, or you go directly to the website, fill out the application online. You have to pull credit. Normally we take it a step further. So, the next slide will go into a little more detail, but there's a pre-qualification versus a pre-approval. The pre-qualification is just us taking the information verbally, whereas the pre-approval is us verifying all of the information that you give us. And again, this just kind of gives us an idea of the documentation we would need: pay stubs, W-2s, potentially tax returns, bank statements, just to verify all your information.
Okay, I do have a question. I'll stop for a second. And this is from Shalonda. So Shalonda, as we can all read it, but I'll read it. Still has a car loan on my credit report. She co-signed for my ex-husband years ago, but he defaulted. How can I still get a home? And that's why I brought some of those questions up earlier, right, guys? A lot of people have these kind of questions regarding their credit and how they can still qualify.
Yeah, that's a little tougher situation. So if you do co-sign for somebody, as long as we could verify that they made the past 12 months of payments, we could remove that debt from your liabilities. But if they defaulted on the car loan, it makes it a little bit tougher. Obviously, it is affecting your score, and you're still obligated to make that payment. So if we can't verify that he's been making the payments for 12 months, we would have to include that debt in your debt to income ratio.
And Shalonda, we can take that offline working with Tony, right, and his team, and we can kind of give you some advice on what path to go down to try to help you, give you information on that. So, good question.
And this just goes back to the point I made a minute ago. Not all pre-approvals are the same. You're going to want to make sure that you provide all the information. Sellers really aren't accepting pre-qualifications anymore. You really want to take it a step further and go through the pre-approval process, just to make sure that your lender has all the correct information, accurate information.
Arlene, could you talk about that a little bit? So I go with you on a Saturday, right, to look for a house. I'm buying my first house. I'm excited. Patrick, right, pre-qualify me based on preliminary information.
Well, first off, we're not
go
seeing
ahead.
houses until you have a pre-approval. I am not going to send you, I am not going out with a pre-qualification. I will call the lender and I will say, what information did you take in order to give me, to get this document? And if they don't say, they may have pulled credit and maybe it didn't collect any documents. Well, I want to make sure that they have everything they need up front, as much as they can at least. And part of the reason is, and I'll talk about it a little more when it's my turn, but I don't get paid until a house closes. So I can't waste my time on a pre-qualification when there could have been some extra paperwork you collected that could have either made it a pre-approval and made a solid, or disqualified them completely. And I've had that happen. So this is years of getting pre-qualifications, getting accepted offers, getting denied. And this is after my client already paid for the inspection, had done things, and then to get denied because the lender failed to collect W-2s, something really simple. And that's something, I had to learn the hard way. But now, and I don't know of any agent that will accept a pre-qualification. We all want pre-approvals. And we're telling if we have listings, we're telling the sellers that we want to make sure that the lender collected as much information as possible up front.
And the pre-approvals really allow us to capture all that information and really get down to, the member's going to provide with us what we take home, because that's what we see every single day. But we're looking for the gross income. And if you're self-employed, we're looking for those 2 years tax returns. So it's important that we do look at those, because we're going to find more income than is actually being stated to us.
Yep. It's good points. And that's why we want to make sure everyone who's on the call, we work with you. And that's why, Arlene, I think you make a good point. We want to pre-approve you as quickly as possible. So yes, you might be pre-qualified, but really in order to go find your house and work with Arlene when going to find the house, we're going to want to pre-approve you and verify your assets and income before you find the house. So I'm glad you mentioned that, Arlene. We do.
And not just like for my purposes, but if you find the house on Saturday, you need to put an offer in on Saturday. So you won't have time to call somebody, get a full pre-approval. By the time that all happens, you missed out, especially in this market. So it's definitely good to be, and I'll talk about it later, but it's definitely good to be prepared up front.
Great advice. Latrina, quick question from Latrina. Should you run and pay off old department store from 5 years ago that are on your credit or charge-offs before you're buying a mortgage, basically? Should you clean it up, I think is the question. She's saying that things are like old and kind of out there. Patrick, what do you recommend?
Yeah, so this is a little bit tricky. So you want to see the last reported date. If it's still reporting you in collections or delinquent, you'll definitely want to pay that off. If it hasn't been reporting you for 5-6 years, it's a little bit tricky, because if you do pay that off, it kind of refreshes that collection account and could actually negatively affect your score initially.
I tell every buyer that I have, if they, the first thing you do is talk to the lender, because if things like that pop up, you might be making a mistake. You think, it's counterintuitive to not pay your debt.
Right, exactly.
So if you go and you pay it off, like you said, it makes it more active. It brings it to the front. And when they could have avoided that so it's always, before making any massive payments on anything, I always say, talk to the lender. Just anything, any big financial decisions, just talk to the lender.
And again, I'll keep reiterating to everyone on the call, this is why we're here. We're the partner of your credit union with Tony. We're here to give you consultation. We'll take it offline. We'll sit with you. We'll look at your individual need, and we will absolutely make sure we steer you in the right direction. One more question. You're very welcome. Thank you, Latrina. All right. You don't have to go through this, but just go over some of the, top do's and don'ts, Patrick, that you see out there, how to avoid some glitches and surprises in the loan process.
Yeah, definitely.
So over some of that already. So yeah.
Home buying do's and don'ts. Just don't take out any new debt. Don't miss any payments. There have been times where I pre-approved somebody 5 months ago. They're looking to update that pre-approval. I re-pull credit and they missed a simple credit card, $25 credit card payment, but that really hurts your score. So just make sure all your payments are on time. Don't take out any new debt. Possibly don't switch jobs if you could avoid it. And even kind of how close your balances are to the limit. So try not to run up credit cards and things of that nature, because that's going to bring your score down as well.
Don't buy furniture the day before closing because you're about to buy a new house.
Well, that's what I was just going to say.
Just wait. Yeah.
I've seen this, and Tony, I don't know if you've seen this, right? So let's say I'm one of your members online. I have a great credit score. I go buy my house, right? Everything's perfect. And kind of your point, I want to make sure I hammer this home. Then I go get a small personal loan for $3,000 before my closing, right? And I just go use it and go shopping, whatever. That can affect you, right? And
That is correct. Yeah.
Current. Could you just talk a little bit about that and why that's again?
Right, because I mean, we've underwritten the loan as to how you applied. And then again, we do a verification of employment and verification of deposit, everything at the end. Again, before you close, we run that credit report again and verify everything just to make sure that you're still within the debt to income ratio, because we have to make sure that we meet the ability to repay.
Yeah. We get those a lot. It happens, right? There's loans closing, everyone. And then you open up some new credit, it can affect you.
The important part is stay in communication with us. We'll tell you, we're looking to set you up for success. We don't want you to fail. We want you to buy that home and we want you to move in and enjoy life. So again, it could wait a week. Just let it wait a week. And the job change, if you're getting promoted within the same industry, that's fine. You can definitely take that job up promotion. It's just, you can't go from car mechanic to nurse, that's going to be a big difference there. And that's where we don't want you changing jobs.
How about depositing cash into your account?
That's another big one too, because you got to season it, right? Yeah. So it can't be mattress money, so it has to be, everything has to be documented, right? So we want to see if you got some mattress money, I would put it in the bank today and then come and see me in 3 months because we only go back 2 months. So, yeah. Great points. And these are come up in the real world. That's true.
Yeah.
All the time. That's why you sit down with us so we can have these discussions. Yeah.
We're not going to go through this, Patrick, right? But this is for when we send the presentation out, everyone. You just can have obviously things here you can know about, and you can take a look at all the terms. Before we continue, we do have okay, just or complimenting the information. That's great. So thank you very much. Okay, that's good. All right. Well, Patrick, thank you again, everyone. We're going to give you contact information when we're done. So if you have any questions about the loan process or credit, obviously go to Tony and his team at the credit union, but we'll help you as well. So Arlene, I can't tell you, I said this earlier, I'll say it again. We get from Pioneer Valley members, from other credit unions, right, that we work with, the number one question we have is the inventory issue going on right in the marketplace today in buying a home and what's going on and the home prices, right, so on and so forth. So we're really excited that you're here to kind of talk a little bit about what's going on in the industry today and why the members who are on here should use a realtor in the first place. Some people think they should sell their home on their own or buy their home on their own. Let's talk a little bit about that.
So there's a couple of things there. So there's a difference between a realtor and a licensed agent. All realtors are licensed agents. Not all licensed agents are realtors. We are a part of an association. We pay dues. We have to abide by a code of ethics. And the biggest thing that we do is we advocate for property owner rights. So when you purchase your house and there is a tax that could negatively impact your property, we are the only organization in the country that will fight for your rights. So when you're picking between a licensed agent that's not a realtor and a realtor, I would always go to the realtor because we're the ones actually going out there and lobbying for your rights. Doesn't mean a regular agent can't find you a good deal or anything like that. They might have their own ethics and morals. They might be great, but they're not actually going out. Like I go to Boston, I've gone to DC, I've gone to our national conventions to talk to legislators where they are fighting for property owner rights. And then when you find a realtor, it's important to have one because you don't know what you don't know. And when you're going through the process of purchasing the house, you're going to be pulled in different directions. Not only the stress that's in your mind from actually purchasing a house, because this is the most money you'll ever spend in your life. You're also, there's so many different things that you just have to know. And I'm going to be the one that's going to piece everything together for you. When I give these classes, I always say, like, I'm the glue. I'm going to help connect you with the lender, the attorney. I'm going to help everything. I'm going to be your guide through the entire thing, which is funny. Right now, you're looking at 4 things. There's a dozen different reasons to use a realtor, but I could give you a million. These are very condensed versions of what I do. I always say that For me personally, I become your friend, and I'm just a friend guiding you along the process of buying a house. I'm just well educated in real estate. And that's the kind of connection you should have with any realtor. Yeah, like I said, you're putting all your money in this. You're putting your life on the line here. So you want to make sure you trust the person you're working with. And as a realtor, we do abide by a strict code of ethics. I mean, we are constantly in training. For me personally, I'm on the board of directors at my association. I'm their treasurer. I'm on the state board, and I run a state committee, and I'm trying to get national. So I'm like super involved in everything. And I keep myself educated, and so do a lot of other realtors I know. So with that said,
Hey, Arlene, let me ask you, can I ask you a question on, so I began with this question. I just want to go back to it because I hear it all the time. What's going on with people? Let's say Tony just listed his house for 290,000 and you go out on Saturday.
Yeah.
Why are people buying Tony's house that was listed at 290,000 for 315,000?
Oh, no, we're going to open that can of worms now. Okay. I was going to ease into that, but we're just going to open that right up. All right. So right now, if you've paid attention to the market at all, you know, like you said, prices are just skyrocketing right now. We have people going 20, 30, $100,000 over asking price. I just had one a couple of weeks ago, 100,000 over asking price, cash and lose. So it's like crazy right now. We are seeing it ease up a little bit, but the biggest reason for this is we have a nationwide shortage of inventory of houses. And the reason why that shortage exists is back in 2008, when we had the housing market crash, which is a whole different scenario, which I'll get into as well. We stopped building houses as fast as we were back then. So when houses were being foreclosed on 2011, 2012, there were so many foreclosures on the market. So many people lost their houses. So people were buying houses cheap. Now we have this whole other thing happening. We have low interest rates or lower interest rates now. They are creeping up a little bit, but that started the craziness with house buying. Then COVID happened. COVID was really, I think, what really pushed things over the edge. And combined with the low interest rates, we just don't have enough houses to meet the demands of buyers. To go back to 2008, and I actually made a video about this earlier because I get the comment saying buyers are waiting for the market to crash to buy their houses low. But what they're not getting is this is not 2008. We are not seeing the same thing that happened back then. The reason the market crashed back then is lenders were giving subprime loans. They were giving variable rate loans starting at 1%, then like 2 years later, raising the rates up ridiculous amounts, and people weren't able to pay for their houses anymore. Then the economy tanked, people lost their jobs. So people just weren't able to afford anymore. What's happening now is because we stopped building houses back then, we haven't kept up with the population growth. And now that our economy is better, our interest rates are better, and we just have way more people, we just haven't brought up our inventory. And to give you a statistic is right now nationally, we are about 5 million houses behind on our inventory build. So even if we were to add 500,000 a year to what we are currently building nationwide, it would still take us 10 years to catch up. Wow. And that's not accounting for population growth. So it's going to be even more as time goes on. So what we're seeing is, if you look at the trend of the housing market for the last 100 years, it always goes up and down. It's always done that. It's just a normal thing. What happened in 2008, we took this big dip, and now we've come back up, and then we just skyrocketed. What I foresee happening is I don't see it bottoming out and houses losing value in any way. I do see it leveling off at some point, maybe taking a little dip. But until something dramatic happens with inventory, we're not going to see prices drop. Does that answer your question?
It does. It does. And let me dovetail to Tony. Tony, are you getting anyone who's coming into the credit union for our participants tonight who wants to buy their first home, but they're a little nervous right now because of what they're hearing in the marketplace? Are people expressing that to you?
No, I mean, We got people pre-qualified,
Yep.
but they're ready to buy a house. It's just there's not enough
Good.
inventory. That's what it is.
That's the bottom line,
Yeah,
right?
that's what's
Yeah.
stopping them right now. They're not nervous.
Yep.
What I find is preventing people is you see the house and you were saying your house is listed for 290. Why am I telling them to go in at 330?
Right.
And they can't wrap their head around it. I mean, you go to a store and it's listed for $10. You're going to the register and you're paying $10. If you with a housing market, it's completely different. So I have to try to and I specialize in first time home buyers because and I love it because it's a whole different mindset. If you've never done this before, like the way I have to explain things to my buyers is completely different than somebody that's been through the process before. So what I have to tell them is don't look at that listing number. You have to look at what you can afford for that house. If you can afford the 330 and those numbers still work for you, don't worry that the house was listed for 290. It's not, you're not going to get in a house with that mindset. You can't be scared of that listing number. You have to worry about the number that makes sense for you. And kind of from that point, then if the house is your forever home, you really need it. The listing number doesn't matter. And what matters is your affordability of the house.
Agreed. And listen, we get calls all day from Pioneer Valley members and other credit union members. People are excited to buy a house. So, if you're reading things in the news or things today, as Tony kind of mentioned, Arlene, listen, we think it's an exciting time to buy a house. There might be some inventory issues out there, but I guess talk a little bit about that. Is it all over the Springfield area? Is there any parts of Springfield that are better than others currently? Or is
Yeah. So that's hard for me to say. That's a really tough question right now because what we found is some neighborhoods that were difficult or, not great neighborhoods have gone up because, with inventory being so low, people are just buying houses everywhere. And not only is it just people buying everywhere, we're having the best qualified buyers purchasing houses. So they're bringing up qualities of neighborhoods left and right. So what was once quote unquote bad neighborhood has leveled up. And that's something that I should mention as a realtor, if I'm showing you houses, I'm not allowed to tell you about the neighborhood. Unless I've lived in it directly. So I know I grew up in Springfield. I know the bad areas. I know where to stay away from. But even so, if I'm showing a house in there and somebody says, what do you think of this neighborhood? I am not allowed to say anything. And that's because I don't know the person's tolerance. I don't know where they grew up. This neighborhood could be 10 times better than where they came from. So I can't, and based off where I lived, I could have, I lived in a really great neighborhood and this one just seems crappy because it's different. So I'm not supposed to say anything. All I am supposed to do is give you the information you need in order to make a good decision. And that's, you contact the police station to get any reports, things like that. So right now we are just seeing such strengthening in our neighborhoods just nationwide because of what's going on in the market.
What's the best advice, Arlene, you could give to people right now who are on the call and who want to buy their first home? Getting pre-approved right quickly, through Tony or, Patrick, right? And then working quickly with you out there because of the inventory or?
Yeah. So my number one advice is you have to be ready. You have to know every dollar you're willing to put into this. And that's because the second you find that house that you love, I guarantee you there are 10 other people that love it too. And they're going to be your competition. So even before you see any house, you're going to want to make sure you have your pre-approval. And to be honest, if you work with an agent that is showing you houses without a pre-approval, you need to find a new agent. They are not on their game. And it's really, you need to know how much you can put down for a deposit. You need to know how much you have for a down payment. You need to know every single thing before you walk into that first house, because the second you hesitate, you will lose. You just took yourself out of the game. And I always say your first move is actually finding your realtor, because we are the source of information. Right now you're in this class, you're getting all this information from lenders. I promise you're going to call me and you're going to say, I don't know what I'm doing. I don't even know what was said in the class. I don't even know what kind of loans there are. Every single class I've done, and I got a call for her first time home buyer, that is exactly what they say. I don't know what I'm doing. And I lead them to a lender. And here's Pioneer Valley. Here you go. And then once I get the pre-approval, we're going to go over how much do you have, how much can you afford?
Right.
And the key thing, you brought it up earlier, is the lender you work with is going to give you the pre-approval based off what they would give you, not necessarily what you want to spend. So you have to take what you spend now. Say you have $1,000 rent, which is really low these days. Say your rent is $1,000 and they're telling you they'll give you a mortgage for $2,000. That is a huge jump. And that right now, it's hard to wrap your head around how much that actually the change is. So you have to know, way I don't want to pay an extra $1,000 a month. They'll give it to me. They'll give it to you, but not necessarily what's good for you. So that's a conversation we would have once you have your pre-approval, is how much do you want to spend? And I don't know, Tony, if you could, if somebody says I only want to spend $1,200 a month on my mortgage, what's the number? I don't know if you get that. I know some lenders will do that. They'll give you a specific, number based off the mortgage that they want to spend. Yeah,
We would, yeah.
you do that. All right. So yeah, I mean, it's really, really being prepared and knowing the second you see a house hit the market, we have to see it right away. There's no question about it. So it's really just it's all the time. You just got to keep looking.
Well, listen, we have Arlene's contact information at the end. Arlene knows the Springfield area better than anyone, guys. She's one of the exclusive partners of Pioneer Valley in working with Tony's team and with ours. So as she said, there's no one better to pick her brain on the state of the real estate market right now than Arlene, and she can steer in the right direction. So Arlene, thank you very much. I mean, I think it's good information. And
one thing, if you don't mind me adding, and we did.
No, please go. Before, yeah.
The difference between the loans, FHA and conventional loans, there is this negative stigma with FHA loans when it comes to agents, because they see it as like a weaker loan. It's not as good as the other ones. And that's mainly because the house has to meet certain standards in order for it to pass for FHA. And when I walk through a house with a buyer, I'm looking for that. If I know they have FHA, I'm looking for railings, I'm looking for peeling paint, I'm looking for these little things that could be a problem for FHA. So if you could, be able to get into a conventional or loan, it would definitely look better. But also for me, it's my job to kind of convince the agent, hey, this house is in good shape. There's no reason why you shouldn't pick this FHA loan over the conventional loan if it's more, especially. So it's really, if you do qualify for an FHA loan, you have to be aware that you can't go after fixer-uppers. You have to go over a house that's almost move-in ready. And you don't get frustrated at me or your agent, whoever you choose for your agent, when we're like, no, that's not going to happen. It's not, we don't want you to waste your money on inspection and appraisal just to find out exactly what we knew, that it's not going to work for the FHA loan. So that's just something I wanted to add.
No, I think the spirit of what I hear Arlene say, guys, it's very exciting. There's a lot of things that go on, right? When you're looking for a house, and Arlene and Tony and team, they'll steer you in the right direction. But just know sometimes there's a lot of variables, right? And a lot of different things that happen once you find a house. So it's great information, Arlene. Thank you.
You have to feel like you're trusting the people you're working with. Trust is a huge part of this. And if you feel like you trust us, we'll guide you in the right direction.
There's nothing more exciting, I think, when you're closing on your mortgage. I mean, Len, I don't know. I mean, I know when I was closing on my mortgage, I was nervous, excited, couldn't sleep, couldn't wait, calling Patrick every night saying, oh my God, I'm closing on my house. Oh my God, I can't believe it. This is exciting. Talk a little bit about that, Len, because I know you're one of the best around. You've been working with Tony for a long time, closing his members' mortgages. What are some of the key things that you could tell our participants tonight as they get to that closing table and they're finally closing on their mortgage?
Absolutely. Thank you, Michael, for setting it up so with such positivity. And I really want to compliment all of the other members of this panel. I've been listening intently to everything that's been said this evening, and there's been a lot of wisdom imparted by Arlene and Tony and Patrick and Cindy. So everyone that's sat through this seminar, I think, comes out of this super well educated on the process. I feel like I've learned some things tonight. So I think this has been among one of the better seminars that I've been.
Thanks, Len.
Had the privilege of participating in. I'll keep my comments somewhat brief.
Yeah.
Just by way of introduction, my name is Leonard Foy. I'm an attorney. I've been practicing law. Was first admitted in 1995. I've been admitted in the Commonwealth of Massachusetts since 1998 and was admitted in Connecticut in 2018, more recently. The good news, I think, for most of the people watching the seminar tonight is that Connecticut and Massachusetts are really somewhat unique in that they are what are called attorney states. So real estate transactions, closing a real estate transaction is viewed in these two states as being the practice of law, which can only be conducted by a licensed real estate attorney, which is great because you go to some parts of the country and buying real estate is basically the same process, but the closings are handled by either clerks or technicians, and that's wonderful. And a lot of them have great customer service and they're very friendly and they have a lot of connections, but they don't have a legal background. So the good news is that wherever you buy in the Commonwealth of Massachusetts or in the state of Connecticut, your closing will be handled by a licensed attorney with a real estate background and a member of the bar in good standing, which I am. Just by way of review, in terms of the role that I play in the closing process. So when Arlene is successful in getting your offer accepted, and she will be, we transition from shopping for a home to zeroing in on the home that you have successfully purchased and you're under contract to purchase. The very first step will be negotiating and finalizing a purchase and sales agreement. And I won't spend too much time on that, except to say that that is a part of the process where I do play a role. I'm usually given a copy of the offer. In Hampden County, typically the purchase and sales agreement, in my experience, is prepared by the listing agent, not universally, but frequently. So I'll be reviewing a document prepared by the listing agent using an approved form, but there's always some give and take with the other attorney. The seller will have an attorney as well. That'll be my counterpart. We'll go back and forth, negotiate on behalf of our clients. I'll be fighting for you, and we'll eventually get to a purchase and sales agreement, which not only reflects the terms of the offer, but is in your best interest and provides you with some additional legal protections. Then I'm still active throughout the course of the closing process, but myself and my team are basically organizing the transaction, communicating directly with you, communicating with your agent, communicating with your lender. Communication is really the hallmark of a successful closing. When communications are in good supply, the closing is typically a success. When there's miscommunication or people aren't communicating, the closing can sometimes be a little rocky. So the corporate culture of my office and my team is we communicate to the nth degree, so that we're all very much in touch with each other and in tune with each other, so that you're always up to date and informed about where the closing stands as we approach the closing date. We also work with the seller and the seller's representatives to reel in that information. And finally, we call you with your final figures, which should be in line with and when I say figures, I mean the amount of the check that you're going to bring to the closing to complete the process. That information is typically very close to what you were quoted at the beginning of the process, and the closing will typically be scheduled either at the credit union or at your agent's office or at a location of your convenience.
Hey, Len, I get this question a lot.
Yeah.
Can people close remotely, or do they have to go to the physical location?
Remote, when we were in the midst of the pandemic, it looked like we might actually get to a place where closings would be fundamentally different and people could basically close in their living room while other people were tuning in, maybe the way we're conducting the seminar this evening. But as the pandemic eased, I think there was some reluctance. A lot of political forces gathered around that. The registries want to maintain control over the process. In Massachusetts, we have county registries, so Hampden County, Hampshire County. In Connecticut, it's done at the city and town level. So were there to be a closing, we could actually close at City Hall or at the town clerk's office. We don't do that very often, but it's a little bit of a different setup between those two states. We're not quite there, and I don't know that we'll get there now that the pandemic is eased. So, Tony, why don't you speak to that? A lot of the closings occur right there in the comfort of the credit union, right?
That's right. So your office is fantastic with that. Our membership, they don't realize you can close right in our office, any of our PVCU offices, or right in their home, or even the new home if the person's allowing it. But the point is, your office comes to them, wherever they are. So Starbucks, or like I said, our office. But yeah, a lot of the closings happened at the Pioneer Valley office.
Absolutely. Yeah. It's all about And and I don't want to put too fine a point on it, but it really is about, as an attorney, I probably I'm not terribly old fashioned. A lot of attorneys, well, regardless of how other attorneys feel, I know for myself, I see myself as working for you, and you being collectively not only the buyer, but also the lender and also the agent. So I'm there to pull this thing off in a way that makes everybody look good and feel good about the process in a way that's safe. And of course, most importantly, when it's all said and done, you know that you have good title to the property. I'm certifying that to you directly. If there were ever a problem or a question, you can come back to me. I'm insured. You have title insurance. You have nothing to worry about. That's important too, that peace of mind.
Let me just stop for a second. I just want to make sure I answer a question, Len, if you don't mind. It might be relevant, but to what you're saying. But so someone and their current husband have several checking and savings together and separate. Is that a good thing when trying to purchase their first home together? They're trying to purchase a multifamily. Patrick, I'll turn that to you. I don't know if you get that question. What's your advice for them?
Yeah, it is a little trickier in some regard. So as Tony touched on earlier, so we basically have to source any large deposits. So if the funds are with a couple different and you're transferring between a checking and a savings and each other's accounts, we may need to source all of those transfers, all of those transactions. So in certain circumstances, it does become a little bit trickier. Ideally, you want to have kind of one account that has the funds used for the down payment and closing costs. But I mean, we could work with whatever you have.
Right. And
Tony, is that
exactly.
fair?
We'll figure it out. And again, it could be a gift situation that we can utilize. So there's options out there and we'll work with you on it. Yeah, we'll figure it out.
I know, Len, getting back to this, when I was closing my house, I knew when I was getting that, closing disclosure, right? I was like, oh my God, what is this? And I'm looking at it and I'm reviewing it and I'm getting nervous. Talk a little bit about that. And there's a 3-day period, right? That the member gets to review that.
Yes. So times have changed. I remember people driving around on the morning of the closing, hitting up family members and friends and enemies alike for help to, get that check in the right amount to make the closing, and the lender would kind of look the other way. We've moved away from a system. We've moved towards a system of complete transparency, full disclosure, and the lender having a complete picture of finances so that the lender knows that you have sufficient funds to bring your bottom line to closing. You get this closing disclosure several days before the closing. You need to acknowledge that you've received it. And there's a mechanism for that. You go through those numbers, your loan officer will review them with you. Patrick will review them with you. Cindy will review them with you. Call me, I'll review them with you because I have some knowledge about some of these figures. Certainly I can explain my own fees and charges and title insurance, which probably is too complicated to try to get into here, but certainly something that's worth discussion. Anyone that has a question about title insurance, either hypothetically or in the context of a live real estate transaction, please contact my office because I'd love to discuss it with you.
Another question, Tony, I get all the time, right? Fielding calls are escrows and bringing escrows to closing, and why I have to bring escrows from first-time home buyers, right? They understand the taxes and, oh my gosh, I have to bring all of this to the table. Can you talk a little bit about that and the escrows from your credit union?
Right. For us, anytime you put less than 20% down, you're going to have an escrow, and that'll include PMI and the property tax. FHA may allow for, a program may allow for escrowing of the property tax, PMI, and homeowners insurance. But the point of the escrow is that with us, it'll have your homeowners insurance, the property tax in there. And every single month, we'll take care of getting the property tax from you so that we can pay the city and town either quarterly or semi-annually, however they have it set up. It's less of a worry for the member. It's something, even if you're putting 30% down and you're at 70% LTV and you don't need to escrow, you should still take advantage of the free offer. I mean, it doesn't cost you anything, but every single month you'll make the payment, and then that'll include us sending the money to the city or town, either again, quarterly or semi-annually, and your property taxes will always be paid on time. And it's a free service.
I think that's right. Yeah. A lot of people don't get that, right? A lot of people, they think the closing costs are the closing costs, and they always sometimes say, well, why are they so high? And they don't understand the taxes and the escrow and why they have to bring that.
Right, because we have to put at least 3 months aside, maybe even 4, depending on when we're closing. But yeah, we gotta get that escrow started, because if you close, let's say today in May, your first payment is due July 1st. So again, we had to get that escrow started because, you know, the next quarter is coming up pretty quick, and we don't want you to be short, because come June of next year, you're gonna have to plus up that account. It just doesn't make any sense. Let's just do it right from the beginning.
Arlene, when your buyers are buying their first home, do you go to the closings with them?
I'm starting to again. For COVID, I wasn't,
Right,
but I did. Yeah, I usually go in there. I'm usually crying with them and having a grand old time. But I like to go.
It is such an exciting thing, an emotional thing too. To your
It
point.
is. I can't tell you how much I cry. Like it's just it's ridiculous. You see, I mean, for me, a first-time home buyer handing over the keys
It's
for something they probably thought they weren't ever going to achieve in their life, and they finally are there.
Right.
It's like a beautiful moment. That's why I love first-time home buyers.
Len, let's kind of wrap this up. What could you really tell everyone the takeaways working with you in the closing? I know you've given some great information, but what really are the key things that our members who are on the call should understand and know working with you, right, as you work diligently and quickly to close their first?
Absolutely. So initially, I would say if I'm involved in your closing process, and I certainly hope to, let's communicate early about the purchase and sales agreement. Sometimes people will get the purchase and sales agreement, and the messaging will be, go ahead and sign this, and we'll be off to the races. I would say I'm available to discuss the purchase and sales agreement. It is a legally binding contract. Once you sign it, you've taken on some obligations. It's all good stuff. It's basically the road to closing on your new home. But if you have questions about it, talk to me. And then certainly once we reach out to you during the closing process, engage my office, reach back, send us the documents that we ask for, whether it be your homeowner's insurance information or whatnot, because it's just going to make the closing process smoother. One other thing too, I have to say on a cautionary note, and I hope maybe if this is your only takeaway from this evening, I hope that this would be among them. When you're buying a home, you are exposing a lot of your personal information to a number of different parties. We are all seasoned professionals. We're all up to speed on best practices. We've been to the seminars. We're certified. We're licensed. We are going to be careful with your personal information. But you know what? You need to understand that your information could be hacked by an external source or an external threat. And I don't want to scare anybody, but I would say this: if you get an email during the course of the process that seems a little odd, asking you to send something here or there, wire money here or there, send a check here or there, anything that doesn't seem to be in keeping with the transaction, the flow of the transaction as you become accustomed to it, I would say leave that email alone and pick up the phone, call me, call Patrick, call Cindy, call Arlene, reach out, call Tony, call Tony's team. That probably will not happen, but I just think that we try to educate people from the beginning of this process that it's periodically the case that sometimes an email account gets hacked. People can see that you're preparing to buy a real estate transaction, and they use that as an opportunity to try to get you to do something when you're vulnerable. So just be careful.
It's a great point, and as much as we sometimes don't like to talk about it, it's very relevant, and it does happen. And I know, Tony, you deal with that, right, on a basis with members' information, right? And it's very, very seriously. Yeah. So everyone, listen, the bottom line on getting more information is we want to give you a consultation. We want to talk to you. That's what we're here for. We're here to walk you through the process, give you information, and Tony and his team at the credit union, Patrick and my team at Mortgage Markets QSO that works directly, we'll do that at any time. We have a QR code here that you can scan, and you could fill out a quick short form, right, Tony, right on the website.
That is correct.
It'll take you right there to give information, or you could call the credit union or email them at myhome@pvcu.org, and we can set up that consultation for you at any time. It's funny, everyone on the call, when we hit that emotional button, right, and talked about buying their first home, people were really excited in the chat. They can't wait. They really can't wait to buy their first home. And it's just such an emotional and bonding and exciting thing. I felt that when you were putting that in the chat, because I felt the same way when I was buying my first home. So I could relate to that. We have Arlene's information. Again, Arlene has a nice QR code right around her picture there.
Yep.
That's the way to do it.
Pointing out the tattoo.
Yeah, right. Got to see it. You know, Arlene, again, knows we are excited to have her here because she understands the Springfield marketplace and the surrounding towns. And you can email Arlene. Her email is there and her phone, and you could visit her website as well. Arlene, thanks very much. The information you gave is really important. And I like how you keep it real, because when you get out buying a home, it's not cookie cutter.
It is not.
A lot of questions, and it gets confusing for our members who are on the call today for buying their first home. And I like how you'll ship them in the right direction to make sure they understand all of their options, not just from what they may read or see. So I really appreciate that.
I do my best. Just a quick thing. My email is incorrect.
Oh, we'll make sure we get that right.
It's Arlene at Arlene.realtor. It's not Realtor Arlene at Arlene.
Thank you. We'll make sure we fix that when we send it out, Arlene.
Well, if they get the QR code, it should fix it.
But we'll fix it. Thank you. Good. Len, thanks very much. It's a pleasure to have you on the call today and your expertise. This is your contact information as well. Any closing comments from you on that? I know you gave some great information, but again, I think it's the most exciting part of the mortgage process when you're closing your mortgage. And you can tell from the chat, people got all excited thinking about when they finally do that.
I agree. And I like the excitement, which is palpable on the part of all of our panelists. So we're all sort of, it's almost like Christmas Eve and the 4th of July and New Year's Eve all wrapped up into one for us.
Yeah.
And I think it's contagious. I don't know if we're feeding off of them, probably, but no, buying a home. Again, I wrote an article recently, and I wrote an article where my wife immigrated from. It was it was forbidden for private parties to own real estate. It was illegal.
Wow.
So we're blessed to have this wonderful system of real estate where people can achieve the American dream and get a piece of the rock. Pick your metaphor, and it's exciting, and I love it, and I think we all do. We all share that. So,
Tony Sanchez, give us some closing words. Again, it's really exciting talking to your members tonight. What would you like to leave them with as a takeaway?
The main thing is, and it's the theme, it's you need a team around you, and we're your team. You know, we're your person. Each one of us will have a role to play.
Yeah.
But you need to have a team that you can trust, and you're staring right at us. This is your team, and we'll be your person.
And I'm not Howie Mandel, right? And we're really looking.
I'm just thinking, Tony looks like he's a sports broadcaster.
Right?
I like the headsets easier.
Tony, shift right over to Miami, Boston. Just pick,
Yeah, right?
the game
Start
starts.
calling game one now.
Yep, exactly.
So here's what we're going to do. We're going to get this presentation over to Tony and the team at the credit union. It is recorded. We can email you a copy of the presentation. We'll record it. We'll give you more information as well when it comes to that. Please set up your free consultation with us at my team or at the credit union so we can get you more information. I will fix Arlene's email, and you have her QR code, and you have Len's information as well. So you can contact them if there's any specific questions. On behalf of everybody, thanks everyone for joining. I appreciate it. And thank you, Tony, Arlene, Patrick, Cindy, and Len. You did an awesome job. I really appreciate it.
Thank you, everybody.
Thank you.
Have a great night, everyone.
Yes.
Go Boston.
Go Boston.
Yeah. All right. Bye-bye.
Bye.